Hello and welcome to the Books Crypto Club weekly catch-up on Zoom. It is Sunday the 12th of March 2023 and the news in the crypto world has actually been about non-crypto stuff this week, particularly about Silicon Valley Bank in the USA, and that has had a major impact over the weekend on the general financial systems, but it could have a crypto connection as well. Let's see if we talk about that this evening. For those who've not seen one of these videos before, we record these every week, Sunday evening, 7 p.m. There are details on how to come along to the meetings in the link below. Everyone is welcome, novices and experts alike. We end up talking about whatever, really. We sometimes talk about crypto, blockchain, DeFi, NFTs, ICOs, STOs, TGs, any other three-letter acronyms, really. We end up just talking about whatever the audience want to talk about. So do come along to a future session. If you enjoy this, then do click on the like, give it a thumbs up, do subscribe as well. But as I said before, most important of all, do come along to a future session. So let's see who's going to come and join us today. Mr. Hancock.
How you doing, Gary?
I'm good, thank you. How's life?
Yeah, pretty good, pretty busy, but otherwise good. How about yourself?
Just sitting back and being entertained by the world right now.
Do you call this entertaining? You're a sick person.
I'm kind of fortunate with not having any direct financial involvement in any of these things. Then I have the luxury of being able to sit back and see what's going on and see how people are responding. So really interesting.
Yeah.
But it's certainly fascinating times.
Yeah, I mean, I don't know how many bank runs we've been through in different markets and stuff like that, but it's obviously one that's this deeply connected to a major stablecoin is the first time it's happened. So you see the knock-on effect from the direct issuer and then all the secondary market effects from DeFi and DEX pools and 3Curve and everything else that goes with it. So it's a pretty big shock, and it's really interesting to see how sentiment revolves back to the longer standing or, dodgier parts of the market like Tether and stuff like that. Tether is still the most stable of coins, which is really weird.
Yeah. Well, it was bizarre because I did a TikTok on it yesterday. In fact, unusually, I'm always trying new platforms, and it was fascinating how it was that Circle's USDC certainly lost its peg quite significantly. I think it dropped to 89 cents when it's meant to be on $1. Then Binance's BUSD, they stopped doing the transactions with Circle because they realized it was threatening the stability of theirs. And then USDT, as you say, Tether, it actually ended up at $1.03 for a while.
At a premium, yeah.
Yeah, which is kind of sounds quite good, but if it's meant to be stable, that's still not very good. So, yeah.
Well, yeah, I mean, it's either still compared to, it's 3%, but I mean, that's just market pressure more than anything else. There's not enough. There's still all the liquidity, while most of it's decentralized, is still centralized to certain pockets. Mm-hmm. When those certain pockets are there, you'll see those premiums start to gap upwards. We were thinking about taking a position when USDC dumped down, but I'm not as bullish on others that the peg is going to be restored on Monday after bank hours is resumed. So there's been too much news over the weekend to try and keep up with.
I'm not to say it's one of those things you're better off at times just sitting back and watching things unfold.
I mean, if you've got the liquidity for degen trades, then it's a very easy 4 or 8% win. But yeah, you are at the risk of, what do they say? Most of it's in T-bills, which is fine, and then the rest of it is cash, and the cash is spread around. So the amount that's actually exposed is roughly, what's the figures, like 8-9% is what's been rumored.
What, for Tether or
for USDC? Like the cash balance is exposed in
SVB. Well, they were talking about 3.3 billion.
Yeah, what's that compared to the real market cap?
I was going to say I don't know what percentage that represents.
Yeah.
But I would imagine it's not insubstantial.
All right, it's 3 billion. But no, I was the last thing I read was it was between 8 and 9% of the total liquidity was actually non-accessible cash at SVB. Okay. So yeah, if you reflect that down, that's probably where it's finding its price market. But I think until there's a point in time where both centralized and decentralized order books are all the same or all the one, you'll still get these centralized pockets that are just responding to market pressure, nothing else.
Yeah, well, it's going to be interesting to see what the US Treasury does tomorrow, or in fact later on today, because I think that the bidding opportunity for SVB is closing at 2 o'clock Eastern time. So I guess that's about now. Because if they find a buyer, then as long as the terms and conditions are okay, then that sorts out a lot of problems. The problem is if they don't, then that 3.3 billion worth of reserves could end up getting marked to 50% of it, or ultimately, which is going to be a bit of a hit. My concern now is less so on what we do know. It's the stuff that we don't know, the impact on other banks, and kind of like contagion effect and that kind of thing.
Yeah.
Which I think will affect not just crypto.
Yeah, well, the contagion effect is stuff we saw out of Terra, showing how many people actually had exposure to it and how quickly that treasury got drained. And then the other one was, how much exposure everyone had to FTX, which is still being found out and still being rooted out. Companies that you wouldn't think have exposure now have a huge amount. And I think we've only just started seeing the startups on Solana start to dry out because their funds were locked up on FTX, the original issuer. The contagion bit is probably the more interesting bit, but it's been a very fast acting. I think the last 2 days I haven't been able to keep up with it. I had to give my brain a bit of a rest.
Well, I think it's the nature of the world that we're in with technology that these things do go faster.
Yeah, I think it was just unfortunate timing with the whole Silvergate bit. The day that Silvergate announced closing was the same day that SVB announced it was selling some equity to build a safety net, and that just scared everyone to doing mass withdrawals, which put them under a liquidity event. So
it's interesting.
Perception and sentiments, everything.
Absolutely. Elena, good evening. You join us where we're talking about some non-crypto stuff that affects crypto.
Non-crypto stuff. So does it mean that Silvergate is not crypto?
Silvergate was. That was one of the major crypto banks. Would you describe it as, Jeff?
Yeah, I think, especially since about 2014, 2015, they moved pretty much most of their operations over to being a regular banking institution, but their primary business was around not crypto itself, but crypto companies. So supporting banking services for Gemini and Coinbase and Binance and all those kind of big exchanges is where all the US dollar issuing and redemptions were done. So it was one of the major marks, and you had to have a big bankroll to even sign up there. I think the minimum balance was like 5 or 10 million. So you had to have a bit of liquidity go in there. And then when they had their own exposure to crypto, they used to do crypto clearing. They added on more and more services. So they kind of, while they were still an institutional bank, they started moving a lot of their activities further and further into crypto, and they just got caught with their hand in the jar when it came to FTX, because it was just cheaper and easier to keep all of their crypto operations in kind of one place. They weren't, end of day settlement, taking everything back to cold storage, etc. They left pretty much most of their assets on exchange, which is pretty anti-bank for a bank to be doing.
Yeah. So Elena, Silvergate's certainly the one that's directly on the crypto side, but the bigger one at the moment is Silicon Valley Bank, which is the US West Coast bank, which, depending upon which numbers you listen to, is probably about the 18th biggest bank in the USA, looking at its balance sheet and that. And it announced it had some problems on Wednesday, and it was doing a cash raise, and that caused a run on it, basically. So a load of depositors literally went to the bank and cashed in. And 48 hours later, the receiver came in and said, "You're out of business, guys." Now, that's a major one, because SVB, as well as providing banking services to a lot of startups, they also facilitate a lot of loans and this kind of stuff in the startup community. I think it may well be in the order of like tens of thousands. And we're talking, companies like Roblox, Roblox, massive software company, gaming company, who've admitted they had, I think it was over $1 billion tied up in SVB. And so the the problem's multifold, really, because whilst there's a receiver put into place, it means that the funds are effectively frozen and the companies can't access them.
Well, also because of the balance they had, if the money just sits there on the balance sheet doing nothing, the bank makes no money. So they basically take those funds and keep a portion of it available and then put the rest of it into investment activities, whether it's short-term lending, long-term lending, different risk profiles. And when they need to generate yield, they have to put it into more risky stuff. When it doesn't need yield, they can put it into more long-term. And when the US basically changed the bond returns, and the way that the liquidity was locked, that basically just caused a bit of a panic, and everyone wanted their money all at once. So everyone wanted all of their accessible cash, and they just simply don't have enough accessible cash. So now they're having to sell some of their long-term stuff, which is currently down at a loss. And they're having to sell lost 180 billion in basically in having to flash sale all of their assets. So yeah, it's just evaporated cash into thin air.
So it's had something of an effect. Now, the spin-off onto the crypto world of this was that there's a number of stable coins. So Jeff and I were talking about Circle before. So they've got a stable coin called USDC. And they had, I think it was $3.3 billion deposited with SVB. So that means that there's a problem, because usually with a stable coin, you've got it asset backed either one-to-one with dollars or other equivalent assets or whatever, like treasuries and this kind of thing. And so suddenly they've got 3.3 billion, first of all, locked up. But secondly, that 3.3 billion might get significantly devalued if the bank closes down, which means they've got a capital adequacy problem. So that causes them problems. So USDC, normally it's one USDC is $1, and it dropped down to, I think it was 89 cents at one point, then it went up to 91. I think it's back up to 95 or even 97 now. So it's regaining its peg, which is good.
It's getting there, but I think that's more market makers moving capital around to restore that market pressure we were talking about earlier. There's still, that $3.3 billion hole. Does Circle on its own balance sheet, i.e. not customer funds, have the ability to, make everyone whole and restore that lost funds? The same as when you see like an exchange hack. An exchange gets hacked for like 100 Bitcoin. Now, if the exchange has been, making fees and running its business right, it should have an excess of every crypto it offers. We have that in our own treasury from the fees we collect or from withdrawals or, our own management or whatever. They'll take that 100 Bitcoin out of their own treasury and make their users whole. So does Circle have 3.3 billion of cash in its own assets to effectively restore the issued peg? We don't know that bit yet.
Interesting. See, we've just been joined by Jay. Jay, hello. Was Jay going to come off mute? She's not. She's staying quiet for now. Yeah. So Elena, it's been an interesting couple of 48 hours in effect.
Has it only been 2 days? Jeez, feels like a week.
Yep. So I think Silicon Valley Bank announced on Wednesday that they had a minor problem for which they were doing a cash raise, which that's not unknown, but for some reason that spooked the market somewhat. So I wonder if there were some insiders who knew things were potentially a little worse than being admitted to. Then the receiver, so FDIC, which is the US Federal Depository Insurance Company, I think it's called. So it's kind of similar. In the UK, we've got a thing called the UK FSCS, which is the Financial Services Compensation Service or scheme. And that's where they guarantee up to, I think it's £85,000 if the bank goes under in the UK. So it's kind of pretty similar to that. And so they stepped in on Friday and said, this is not good. It now turns out, I believe that in excess of 97% of the deposits were not actually covered by the FDIC scheme.
Is it not covered, or only 3 or 4% had balances under 250K? Because how I would see it is they insured the first 250 and then the rest of it's uninsured. But is that
No,
not the case?
I think it's a mixture of things. I think some of it is you're right. It's only up to 250k is insured, but also some of the funds that SVB held were not held in deposits accounts. They were held in, was it medium maturity funds or something? So they weren't deposits. They were actually something explicitly different,
Right.
and so aren't covered by that. So.
Gotcha.
Yeah, so it means that there could be a lot of people short of a lot of money on Monday. And the concern right now, and this is why I would guess the US Treasury is having all sorts of meetings about it, is that this means that for some companies, the company, Roblox, for example, profitable, doing well, blah, 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 for you to have your bank account frozen, potentially just at the point at which you're just about to pay the staff salaries, means you're not going to be able to pay payroll. And that has quite significant legal repercussions in the States, even if it's not your fault. So we'll see where that goes in the next few days. That's why I think that the government's going to have to come up with a very fast response on this. So we've just been joined by...
Everything happens with the speed of light in this world. Isn't it?
This is one of the things that is a challenge with crypto and the whole DeFi space, that the traditional financial world has traditionally had kind of buffers in place. They talk about settlement of payments being T+5 or T+3, which means it takes 3 to 5 working days for something to get resolved. That means when you get these kind of like systemic shocks, there's an opportunity to do something about it. We can sit back, we can have a big meeting, we can have a cup of coffee. But in the world of crypto, and certainly with electronic payments and that, things go wrong fast. So
there's no bailout buffer in the middle where we've got 5 days to sort this out. We can get a bailout deal done in 1 day. When you get flash liquidated for any reason, or there's an inefficiency in the market, it'll get closed up very, very quickly. There's no second chance buffers with crypto and blockchain. In fact, it leads on to a really interesting one to sort today. Do you know Martin Massa on LinkedIn? Yeah, really up on trading tech, blockchain tech, etc. Someone went to move out of Curve, with 3 pool and stuff like that, and went to basically move out of a whole bunch of USDC into USDT, but basically didn't use the most up-to-date smart contract, used the version 2 smart contract, which doesn't have any liquidity pools on it anymore, and went to flash sell over 2 million of USDC and got 5 cents in USDT and change.
Okay.
Yeah, because there's no liquidity there, and it basically said go, pay the gas fee, off it goes, and the return contract returned basically the entire liquidity of the pool, which was 5 cents or $2. It was maybe it wasn't 2 million. It's a really, really bad day at the office.
It's one of the in the old days you had fat finger problems occasionally where you type something wrong. Now they've automated the getting the stuff wrong for you. Yeah,
pretty much. But I think it was wherever he had originally issued it from, he just went back to the same place instead of going back to the most updated, fresh contract directly from the website or directly from the interface. Simply went back to the most existing, the last contract he used, whenever that was, and it was a V2 contract versus a V3. So stuff on Uniswap still works in V2 because they haven't moved those liquidity pools over to the newest version. So there's still sufficient liquidity on certain shitcoins, but all the most up-to-date stuff, i.e. USDC to USDT, Ethereum to USDC, they're all running on the version 3 router. It's more efficient, more liquidity, less slippage, that kind of good stuff. But a fat finger problem like that is, you can never come back from that. There's no undo, there's no return to sender. Whoever was the genius that left their liquidity bot on V2 just made 2 million USDC. And that's where a lot of these really smart guys in the DeFi space are cleaning up by having these MBV bots, find arbitrage opportunities and scalping opportunities whenever they appear. Blows my mind. I wish I was a bit smarter on the programming front to take advantage.
I think this is the problem, that there are so many potholes and this kind of thing where things can go wrong, that it's still, I think the whole market just isn't mature enough for its own good yet. No, and it kind of comes back to I always talk about my aeroplane analogy, which is where you come up with a new idea, whether it's a smart contract or whatever, and it takes off and it crashes, and there's blood and guts all over the place, and the government come in, the regulators come in, and police come in, and they set new rules, new guidance, and over time the governance improves, such that in aviation these days, the joke is that an aeroplane's not ready to fly until the paperwork for the certification is heavier than the aeroplane. You kind of get that in the financial world as well, that you need a lot of regulatory approval and review and that to make sure people don't get hurt.
Yeah, and same with your analogy now, like nearly every country in the world has very similar aviation standards as well. So, a plane that passes muster in Japan or China or, America are pretty much to the same standard, which you don't have that in financial markets even to this day.
Yep. It's kind of interesting. So we've just been joined, I said hi to Jay and Ivika through the chat, but I see Bill's joined as well. Mr. Wilmot, good evening. Because I'm sure Bill will have something to say about the financial world at the moment.
Hello, can you hear me okay?
We can.
I have a few problems trying to register. It wouldn't let me register properly. So I've been going around in circles for the last 10 minutes. So I'm glad I got here.
You're here now. We're talking, unsurprisingly, about Silicon Valley Bank and the impact on stablecoins, and then went on to some other interesting stuff that Jeff was sharing about a smart contract that was used incorrectly a couple of days ago that had a bit of an impact.
Oh, interesting. Well, yeah, it's a bit crazy out there at the moment, isn't it? To be fair. Obviously, I hadn't heard of whispers, but I didn't expect things to kind of happen this quickly, really. So it's kind of taking me by surprise. Luckily, I'm not involved in any way, so I'm just on the outskirts looking in, really. But it's obviously escalating because since I started watching or listening to the story developed, it's actually grown in size. And
so I guess again, it's not a crypto point, but are you watching what's going on in the commodities markets at the moment? Is it having any effect on prices of things like gold and silver?
I haven't really looked at it there. I've just been watching the story develop and trying to keep up with that, and trying to obviously get my own filbits going. Obviously, we've seen these things before, and they're quite commonplace if you look back in history anyway. And what's interesting is that, we're talking about historically the regulation of, if you like, the traditional markets. And what we've seen happen, obviously, this year and last year, is actually where crypto has been found out in a way, or its several custodians have been found out. Yeah. And it doesn't really matter whether it's a bank or a new crypto platform. Fundamentally, they're suffering from the same problems, aren't they? Which is carelessness, really, yeah? Or greed, yeah?
Well, I think that's the thing we were saying before. In some ways, it reflects the level of maturity needed that hasn't quite been attained yet. Whether that maturity is in terms of attitude or coding or testing of code or migration of platforms or whatever. It's like I saw it a few years ago when I was involved in a couple of projects in the ICO craze. So the whole initial coin offering phase where everyone was trying to, and everyone was very keen that you got the associated smart contract audited. And you go, okay, so what does that involve? And I actually looked at some smart contract audits, and they were all about checking to make sure that the software had been written without any obvious security loopholes in it. But I don't recall reading a single smart contract audit that actually validated that smart contract did what it was supposed to do. It was is this patch applied? Is this security threat dealt with? Have they avoided using this type of character? Blah, 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 blah. At no point did anyone actually say, yes, it actually does what the white paper says it's supposed to do. So it was interesting. People seem to mix up auditing with testing. People seem to think that when you audit software, that means you've tested it. and it doesn't mean that at all. So, Elena, you're smiling there. You've got a bit of an IT background as well, haven't you?
No, sorry. I just read Ivica's message.
Ah.
And I wanted to say to her personally that Ivica, do jump in. It's fun.
Yeah, come and say hello.
It's an idea either, and it's totally worth it.
Yeah, come and say hi, Ivica. Fine, come and chat.
Hi guys.
Hey there.
Yeah,
Well, so tell us a bit more about yourself then. Where are you from? What's your interest today?
well, I'm from Serbia, and basically I'm in crypto for a long time, and just watching what's going on with Silicon Valley Bank and USDC, DPEG, and everything else.
It's all certainly interesting stuff, isn't it?
Yeah, it is. I mean, sorry.
You say you've been in crypto for a number of years then?
Yeah, I am. Honestly, I think that the USDC will be fine. It was kind of crazy that it went down to 88 cents, I believe, something like that. That was like 12% premium, and people who had balls or had USD or USDT, they made a lot of money. So
yeah.
See.
It's one of those things that in crazy markets, there's always someone making money and someone losing money.
Yeah.
And everyone always thinks they're going to be the people making the money, and they're often wrong. Well, thanks for joining us today. The session is totally open. If you've got any questions or you want to share anything, then feel free.
I'd like to say something actually. I'm looking really from a high level point of view at the moment. I'm not diving deep into every crypto, every opportunity where people can obviously generate income from crypto. I just look at, what's happening here is that we're seeing that kind of event happen, and everyone's trying to work out a safe place for their money. You've got people going to the banks trying to find it and get the cash out, all kinds of things going on. And this is, I posted earlier that if we go back to the last one we had, things don't happen all at once. They tend to happen over a series of events. And it's trying to work out where you are in that kind of system, really. Whereabouts, how far through are we? How far we've got to go? How far is it going to actually send the contagion? Yeah. You can see, obviously, the British government trying to prop up certain institutions already. It's happening around the world already. So this isn't just a crypto problem, is it? That's the point. It's actually a lot bigger than that. And is that happening because crypto's got too big and it's actually spilling over into the traditional finance area, or is it something completely different? I don't really have the answer to those questions, but the fact is, if you're looking for a safe haven, where do you go?
So,
I don't know if you've been to Sainsbury's recently. Eggs. Buy eggs. Eggs are the deflationary currency that no one can get a hold of.
I've seen a few jokes about eggs in recent weeks. I have to say, a new currency, perhaps.
Yeah, I went to buy eggs. Yes, there's maximum 2 boxes per person, but they don't sell the 12s anymore. They only sell 6s. It's a constrained supply. You go there anytime after, 2 p.m., you won't get any eggs. I went there Friday night, the place is stripped out. It was insane.
You're right. I mean, I've got a little
That's a supply chain, isn't it? I mean, it's the same as we're talking about supply chain and economics now between crypto and traditional markets. They were so isolated from each other 5 years ago, but now the liquidity pools and how they cross over each other are so much more liquid now with these type of banking institutions, with stable coins. I don't think we're seeing cross collateral just yet, stocks and shares of a stable coin, but I think it's proven that effects in the existing financial system can shatter parts of crypto, and it shows that crypto is still very, very fragile.
Yeah, I think the other thing as well, you're right, Jeff, that the regulators and the governments, the regulatory side of things, which is responsible for systemic stability of the financial system, are recognizing that, everyone's talking about central bank digital currencies, everyone's talking about cryptocurrencies. The real challenge is going to be stable coins, because they're the gateway between the two, in effect. And that means that you may ultimately have a run on a crypto event that suddenly starts affecting fiat in some way, and vice versa. And so you can kind of see why the governments, everything I've seen come out of the Bank of England, FINRA, is it for Switzerland, and BaFin for Germany, and this, they're all talking about putting in regulatory controls around stablecoins before regulatory controls around crypto.
But is that for issuing or using them?
Well, it seems to be for the overall use in some way, and that ties in with issuing in the first place.
Yeah, that sucks. I think they should do it on issuing, not usage. I think doing it for usage is garbage.
But I think it is that they're beginning to realise that here's something that if you intrinsically link your nation's currency to something else that you don't control, then you've suddenly got a threat vector that hadn't been a problem previously.
Well, that's like saying no UK firm has exposure to US dollars. Like every UK firm has exposure to US dollars.
But it's one of those things again. I think regulators and governments don't like the feeling of not being in control, and so they'll put in place controls. Whether the controls are effective or not is another matter. It's simply a matter of them wanting to feel comfortable. And again, I was having a chat to someone the other day about what's happened with the Silicon Valley Bank, and someone was saying, well, does this show that the regulators need to be doing more in some way? It's like, no, it shows that the regulators aren't doing what they should be doing because they appear to be looking at the wrong things in the wrong way, because this kind of thing shouldn't happen. And it was, anyone who looks at how they were funding, where they were putting their assets and that would have realised that there was a major issue coming up when
that
future value of something.
That was down to a risk framework and a regulator telling you your risk framework isn't, you're putting X amount of assets in too risky. That's down to a matter of opinion. I get a letter from Hargreaves Lansdown every month because of my exposure to MicroStrategy. That's my decision, not theirs.
But it might be, and again, this is where there's so many little snippets coming out at the moment. It may not have helped that the chief risk officer resigned last April, and they only formally appointed a replacement one, I think it was December or January. So it's possible, that again may have had some sort of impact in some way.
I think this is one of those other swan events. It just happened at the same time as Silvergate, so it was already a bit of a pinch on that major inflow and outflow of crypto. And then at the same time, you had a bank that also handles basically more than half the startups in Silicon Valley and a lot of other major institutions. And it's just one of those timing events.
Yep.
Silvergate happened, and then the US changed something, and just as Silicon Bank were changing where their capital is invested, just one of those perfect storm events.
It's a bit like Bill, you were saying about in terms of like almost a chain of events. I know, going back to the aviation analogy again, the way that certainly the military and aviation think about things is that an accident is a sequence of events. It's like links in a chain. Yeah. And if you can break the link in the chain, then that whole event cycle has to restart again in order for an accident to happen. And it's all about breaking the links in the chain. So I think, as Jeff says, it was a sequence of events that happened to play out that may have had a bigger impact. But we'll see anyway. So, Sebastian, I see you've joined us and you're staying quiet this evening.
Hello, Otto. How are you?
Hey. We're talking about the fiat world intersecting with crypto at the moment, and the fiat world's having a bit of fun.
Looking for some stability, are you?
Well, this is it. And but Bill was saying about it, looking at where you put your money in, safe harbor, and this kind of thing. And I remember being asked that question in the group about 3 years ago, and it was like do you put your money into crypto? Do you put it into stocks and shares? Do you put it into gold? And I never, ever offer recommendations. But I did suggest to somebody it might be an idea to buy perishable or non-perishable food and water, and maybe a bolt hole somewhere. But maybe that was being a little bit negative. So we shall see. So you're still watching things on the Ethereum side of things, particularly, Sebastian?
Yes, and there's a new project that's been announced relatively recently, which is the sign-in with Ethereum protocol.
Okay.
And so that looks really very interesting. It's it uses Ethereum as the sort of trust mechanism to have a OAuth style sign-in page.
Yeah. Can you explain that? I'm going to use the chat GPT phrase now of explain this to a 5-year-old type thing. Could you offer an opinion on how that works or what it does?
Well, I can't claim to be an expert on this, but from my understanding, instead of OAuth, which is the kind of the standard for sign-in at the moment. So if you see like sign in with Google, sign in with Facebook, that's using a protocol called OAuth, so that Facebook vouch for your identity on another site.
Okay, so that's OpenAuth, isn't it? OAuth. Yeah.
Exactly.
Yeah.
And OpenAuth, never quite got as far as it was intended to. In this, only a few providers of authentication have really managed to get a foothold, which is Google, Facebook, and I think Apple might be one of them. Yeah. Sign in with Ethereum would change that, because anyone with an Ethereum balance effectively could use a small amount of that in order to get a third party to vouch for their identity, using the cryptographic trust of blockchains in order to replace the kind of server client-based mechanism of OAuth.
So is that going down kind of like the vision of Web3, where you're effectively using your crypto wallet for identity management?
Exactly, yes.
There you go. That was the 5-year-old answer. It's using a crypto wallet to do your authentication instead of having to do the do you wish to log in using your Facebook credentials or your whichever else credentials. Okay, that's interesting. And also on Ethereum, they were going to be deploying the final parts of the proof of stake protocol, weren't they? And they delayed that. Is that right?
I'm not so sure. I thought that everything had happened.
For the Shanghai upgrade, you mean?
I think it might be. It's just something that I'm aware that there was the move to proof of stake. And I know certainly they were going to be moving it off testnet onto mainnet. But I thought there was something else that they were going to be doing as well that didn't happen and was going to happen in March. No,
I know they wanted to replace the number of verifying engines, because currently they had one implementation of the protocol, and they wanted to spread that out a bit.
So for Ethereum, what's a verifying engine?
I'm really not using the correct terminology here, but
okay,
it's the piece of software that ensures that your stake is true and not falsified, and there's a reference implementation which is being used for more than 50% of the network. So if that were to have a vulnerability in it, then you could create, effectively you could mint more Ethereum yourself. You could forge Ethereum.
Okay, so this is kind of like as on Bitcoin network, for example, with Bitcoin protocol. One of the things that the miners do, as well as validating the blocks generally for structuring content and competing for the cryptographic puzzle, is it does verify that when you say I'm transferring to BTC from address A to address B, that address A does have 2 BTC in it in the first place. So otherwise you end up with a double spend problem. Does that sound...
Yeah, so the thing is that I know that one of their long-term goals is to have a very diverse network of these, I forget the terminology, but they verify the stakes. And the idea of that is that if one was compromised, they would still not be able to forge Ethereum.
Is it validators by any chance? Would that be it?
Sounds right, but I couldn't be sure.
We'll go with that. Unless, is there anyone else on here who knows any better?
Yeah, and it's not really 1/2. It's 1/3 plus 1 to be able to actually do something.
Okay, thanks for that, Vika. Great. Okay, we're probably at the point in the conversation then where I get to ask if anyone's got anything else that they'd like to share or ask at this stage.
Well, I wanted to, someone mentioned Silvergate. Did you talk about the SAN network that they operated, which actually caused a lot of problems?
I'm not close enough to be able to comment on that.
Well, SAN network was a network that basically all exchanges actually used, and that's what actually made possible for exchanges to settle between them when banks were actually closed. And one of the reasons why Coinbase actually stopped conversation between USDC and USD is because SEN network is basically shut down last week. So they are now depending on the banks and working hours. And as we know, crypto never sleep, but unfortunately banks are sleeping.
Yeah.
And without the SEN network, it's impossible to do the settlement the same moment as you want.
Vika, it's not a great line. That's why I've got the headphones on. What's the network you're describing? Can you spell it? Or
SEN network.
Okay, yeah, because I know things like SWIFT and the traditional payments world and that kind of thing.
Well, this is something that Silvergate actually made and operated. It's a network between exchanges and Silvergate. So basically, you can send the USD from one exchange to another exchange, and it will be instantly.
Okay.
And that one is shut down, and now exchange can send the money between themselves without the bank.
Okay. So did that happen just before Silvergate had problems, or did that happen because Silvergate had problems?
That happened this week, I believe. They turned that off. And that's why basically USDC can't be redeemed during the weekend because there is no more SEN network and they can't really settle.
Yeah, it was the Silvergate Exchange Network.
Right. Got it. I understand now. So that's a big kind of critical then. Right?
It was playing a big part for exchanges because and crypto in general because you could do things any moment, and right now you're dependent on the banks that work only during the Monday to Friday. So it's kind of problematic.
Because it's been a crazy week, so I'm probably getting things confused. Was it Silvergate who the Federal District of New York suspended the license as well? Was that all tied in?
Yeah, they're under many investigations right now, basically.
Okay.
And they also had a big bank run in the past and basically collapsed because of FTX and Alameda.
Okay. It was interesting. Someone put a tweet out the other day about how you shouldn't have all your funds with one bank. And what you should actually do is you should spread it out across. And they listed off Celsius, Three Arrows Capital, FTX, and they just listed all ones that kind of collapsed and said, look at that for a diversified portfolio, far safer.
Yeah.
Which was not great. So cool. Okay. Right. We've got 15 minutes left. It's an interesting range of conversations there. I don't know if that's generated any questions or any comments or anything.
Just on observation, I think it's obvious anyway, but when it comes to crypto, we're talking to a relatively new market anyway. And the people that are participating in crypto normally don't have a great deal of financial background or as investors. Yeah, they're coming in with very little amount of money, sometimes some completely different nations than the one we're used to. Yeah. So would their, I suppose, faith when the price moves be the same as someone, for example, who has maybe invested in shares and things before? Because what crypto does, it allows you to get involved fairly easily with little cost. Yeah. Or what might be a little cost to us, but actually is quite significant to someone else.
Mm-hmm.
Haven't got robust investors always looking at what's going on. You're looking at a completely different game of people getting involved in investing. And probably got their head as well sometimes.
I was going to offer, Bill, I think there's actually multiple crypto communities and their financial savviness kind of varies. And it ranges from people who actually are former financial services people who realize that the world is not right and they're getting into crypto. So for them, they're kind of comfortable with some volatility and uncertainty. but they do get spooked. I kind of laugh when Bitcoin goes up like 3% in a day or something. Like a couple of years ago, that was a big deal, because if you compare that to a share price of BP or SO or ICI, wherever, a massive shift like that was phenomenal. And I think a lot of people have now come to terms with that. I think you've also got another community who are the don't know any better community. These are the potentially younger, newer entrants who come into it, who all they see is, oh, to the moon, my mate made 100 times on this, blah, blah, blah. And that they put some money in and then it tanks or whatever. So I think it's actually a mix of the community.
It's definitely a mix. There's definitely a mix. The question is, we don't actually know what the makeup is. How many of those types do we have involved? For example, the more established investors that come from a traditional background, and those who actually are just going to like QQ coin or something, I'm throwing a few quid in there. There's one called Shibu or Shib has gone up.
Shibu, yeah.
The second meme coin, yeah.
You shouldn't be that far up, is it? It's just the attraction of it is actually question and demand, I suppose, in a way. But there are far better opportunities out there than that.
But also when and you can definitely tell when people talk about it, because Shibu's better than Doge because it has a marketing team. That's not. Yeah. It's not how it's supposed to work.
Yeah.
Well, Doge just has what's that? Elon Musk tweets something, a picture of his dog, and hey presto.
Well, that's kind of the confused view of it. Doge, everyone forgets why it was invented in the first place. The reason Doge was even invented was for a really good reason, was to educate people on how to use wallets and how to transfer tokens around, because it was so cheap. But also the tokenomics of it is that 10,000 Doge is created like every minute. So it's kind of impossible for Doge's value to ever go up unless it's just purely manipulated. Now, when the founder moved away from it, because no, this has gotten out of hand now, this is not what it was designed for. He's kind of ridiculed most of the crypto space since. But if he built it purely to be an education tool, it is a bloody good one.
Mm.
So how does that work? If it's creating so much more, then how are people still using it?
That is a really good question, Sebastian.
Don't know. You can't answer.
I don't have a good answer for you. That's my point. I don't think anyone realizes the supply increase it goes through.
Zimbabwe could have done with whatever technique.
They could have moved to Doge and been way better. Yeah, they could have moved. Yeah.
Yeah, I'm thinking about the Zimbabwe dollar coin. That'd be an interesting one. Yeah, it's fascinating because there are so many of these things. And as Jeff says, some of the things, the original intent may have been in one direction, and it's ended up in a completely other in some way. But that's what happens with technology. That's what happened with SMS originally. SMS was an engineering messaging tool that, for some reason, a load of people went, 140 characters, I'll use that, blah, blah, blah. And before you know it, there's millions of SMS messages every day. It just got adopted, whether people knew why or what. So interesting stuff.
I've got a question about wallet applications. So I'm someone who's very, very trusting in the blockchain protocols because they are based on very strong cryptography. When it comes to actually using them via wallets, though, stuff seems to get a lot more ambiguous very quickly. And so the Bitcoin Core has this nice sort of desktop program in which you create your keys and you can transfer funds around and such. But I've been struggling to find similar kind of applications for other blockchains. So where do you find good, simple client applications, for want of a better word?
And on the core team that developed the blockchain in the first place, if they have a really, really good tech, they still have to make a front end for it. And the front end for it is usually their web app and their desktop app. And, with not enough usage, not enough support, they'll never make a good app for everyone to use. That's why usually they get relied upon for those multi-chain apps like Exodus Wallet or Ledger or something like that to provide a decent level of experience support. But I think every token had a wallet at one stage, and a lot of them have simply just died off. There's not a one size fits all, but I remember one of my PC installs from years ago. I might have had 15, 20 wallets installed on it.
Mm.
Yeah, I guess I'm looking for the equivalent for blockchains as GPG is, like the command line tool, and you can just do stuff completely offline without having to rely on a hosted service.
Yeah, I mean that's where I usually just default back to Ledger, because that's one that I know and kind of trust. It has enough support for the tokens I want to use. I'm not doing a lot of brand new token chain stuff.
But what is it you're thinking of, Sebastian? You're looking for a wallet that connects to all the blockchains, or you're looking for new applications that sit on blockchain?
Yeah, I suppose I'm looking for what's the minimum viable wallet application, which is like open source, basic functionality.
For which chain? You talk about all chains?
Well, it's as flexible as possible, really, because I'm struggling to find any at the moment.
You kind of want command line like GitHub or git X, and then pull down whichever wallet library you need. I don't know of anything that exists like that at the moment.
I was going to say that they do still tend to be blockchain specific. So you got like Mu, so my Ether wallet, which is a fairly simple one. On Cardano, you've got the protocol which is Daedalus. I think it is Daedalus protocol, but that's for using with Cardano. What else we got? I'm trying to think of some of the other ones. They do tend to be chain specific, and it sounds like what you're looking for is something more like, as Jeff says, like a Ledger or a Nano or whatever, which has got a wallet interface that allows you to connect to multiple chains. Especially
like a Ledger, if they're doing it, if it's got Ethereum support, it'll usually be very quickly supported for any layer 2 stuff. So anything Ethereum based will be supported on Ledger by default, and then it will also support your Optimism or Avalanche or Polygon, just because they're all side chains using the same wallet checksum. So it's kind of tough, but it comes down to what chains you actually want to interact with. I don't really have a use at the moment to have my Ethereum wallet and my Solana wallet and my DOT wallet commingled on one app. But if I did, I just used Ledger. I've still got a MetaMask and Phantom wallet and stuff in my browser. It just depends on what activity I'm actually doing. If it's DeFi stuff, I'll look at the DeFi protocol first. If it's got a Wallet Connect support, which only some of the top tier ones actually do, then I'll do it via the hardware wallet because it has that wallet connection. If it only supports MetaMask, then I'll go and use my MetaMask, but I'll spin up a new wallet so I'm not exposing my other tokens, I suppose. But I'm probably a bit more of a power user because I've been doing this quite a long time, and my background was always tech and cybersecurity. So I will always go the little bit of extra effort to move stuff around. I think for either an amateur or even a professional investor, they'll stick with a ledger or leave it on an exchange. They probably don't do a lot of spending stuff. And, same as the bank account thing. I have 5 bank accounts because it was hard for me when I came to this country to get one. So I got as many as I could because I knew they were going to get cut off for any reason, either my visa or for anything else. I had no idea. So I kind of spread stuff around as well.
Sounds like there's a big sort of gap in the market for something that's very flexible and kind of protocol agnostic.
So in that kind of stage, it'll only be Ledger at this point. And I know that sometimes half the app is off or offline because there are several downtimes on different blockchains. So something you might be able to make something really, really special that does support it, but then you've got to get market traction to build it out. And how often do these changes get updated? A lot.
Yeah. And it's something, Sebastian, working with a cyber security company who are developing a digital asset custodial solution at the moment. And it is quite difficult to try and work out how you get into the market with a solution. Even if you have got something that does all of what you're looking for, trying to actually get people to adopt it.
And pay for it.
Yeah, exactly. Particularly when, if you can have 3, as you say, like you mentioned several wallets there. If they're free, then why would I want to pay for one type thing? And these aren't free to develop. And a lot of them are open source as well, so they're easy to access. So.
I think the kind of role model in terms of this kind of application development would be the recent work on decentralized identity.
Mhm.
And because of the way that the standard organization work, they require it to have a certain number of implementations before it gets its stamp of approval. And so you've already got a guarantee when it gets released that there's some support behind it.
Yeah, which comes from a big pre-launch or a go-to-market strategy partnership or something like that, which will help kind of boost its adoption. But I mean, I can't even count how many crypto tax companies have approached us to do integrations and stuff like that, which we're happy to do because I think crypto tax is an interesting topic. But the amount of people trading crypto versus the amount of people that are trading crypto and doing their taxes is like absolutely tiny. So how much time and attention can we put towards multiple crypto tax providers when only one of them might only have traction? It makes us look quite weak because then we're just shouting about 5 different solutions.
It's an interesting one, Sebastian. Maybe if you come up with some thoughts and ideas, then let's have a chat about it.
Yeah. Yeah, at this stage, I'm close to coming back with code, so stop me from going back there.
You can pitch it on the next call.
Yeah, absolutely. If you've got any ideas or thoughts, or you want to share some thoughts next time, that's great. Talking next time, we've only got a few minutes left, so I'm conscious we're about to hit the time of day where I finish off. I'm going to ask the question I always ask of Elena. Do you have any questions, Elena?
What's a semi-fungible token?
I'm not going to answer that one because I don't know the technically correct answer.
Sorry, I said again, I missed the question.
What's a semi-fungible token? Apart from a marketing term, which I think is what I've called it before.
Yeah, I wouldn't have a clue. It's kind of like, yeah, you're either fungible or not. It's like negative and positive. Is there a charge different to negative and positive? No, there isn't. It's either one or the other. It's like binary, right?
Unless you go into quantum.
Yeah. That's a good question. Semi-fungible. I'm sure someone's used it in a white paper somewhere. You should have Google.
I seem to remember that there is a protocol that has been developed, exactly you say, Elena. So I know that on the Ethereum protocol stack, for example, you've got the ERC20 standard, which is a fungible token.
Yes.
You've got the ERC721 standard, which is the non-fungible. You've then got the ERC1155, which is the set of tokens standard. And then I think there is another one, which is a semi-fungible one somewhere. But I've not looked at it closely enough because there are times when I look at these things and I go, it's either fungible or it isn't. Well,
yeah.
So if I can try to explain it easily, it's like if you have an NFT, for example, and you have a possibility to make one of NFTs, multiple owners of one NFT in a collection, if you understand what I want to say.
Well, if it's one NFT, then that's just an NFT, isn't it? That's the whole idea of it. It's a unique. It's not exchangeable.
Yeah, but you can have a multiple owners of the same.
Okay.
Like picture.
Here we go. So I've just Googled SFTs. Combine the characteristics of fungible and non-fungible. Comparatively recent innovation of the Solana blockchain. SFTs are currently being used in the gaming and metaverse applications. The idea of semi-fungible tokens were initially created on Ethereum ERC1155 multi-token standard. Exhibit the qualities of fungible tokens and non-fungible tokens at different points in their life cycle. Initially, an SFT might be fungible, like tokens being exchanged with identical tokens with no loss of value, but once used, they lose their exchange value and gain attributes as collectibles. So it's kind of like you can spend it once as a flat exchange, and that makes it fungible, and then once it's used, it's kind of the end of the transaction, it's burnt, and now it's a non-fungible token. So it's its life cycle. So it might be able to be traded a certain amount of times to give it a life cycle. And then after that, it turns into a brick or an item or I don't know. I can see that for like in-game stuff, because like an in-game item for some games, you can use it 3 times or you can use it 10 times and then it becomes something else. So yeah, very limited scope, but yeah, good idea.
Hopefully that answered it in some way. Thanks, Elena. Right, with that then, because you baffled us on that, I'm going to call a close to the session today and thank everyone for coming along. That's a very big range of things that we covered in the end. It's unusual that we didn't have a fuller, more complete answer on that rather than resourcing to our friend Google. but thanks for doing that, Jeff. Everybody, thanks for coming along today. Really good chats. Great to see you all. For those who stayed quiet, I hope you found it interesting and informative anyway. Do come again next week, and I'll see you all around, folks. Bye for now.
Thanks, Gary.
Bye.
Thank you.